Hey, welcome back to The Market Investor. I'm Daniel Snyder. Thank you so much for checking out this video. Click subscribe if you haven't already. But besides that, we're going to dive in and show you how to buy and sell option contracts within the ThinkorSwim platform. So without further ado, let's roll the intro and get into it. All right, so here we go, guys. We're going to dive into the platform. We're going to go ahead and log in. I'm going to jump into the paper money trading account through ThinkorSwim. Now, this is just the brokerage that I use, the platform I use. You, of course, can use any other brokerage out there. Of course, there's TD Ameritrade, there's Robinhood, Webull, E-Trade, Fidelity. I mean, there's just, you got to find the platform that works for you, and I just know that this one works for me. So I'm gonna go ahead and click on Apple over here. This is my watch list that I have set up from prior videos. And these are just the main companies that I know the most about. I love their, you'll see the dividends on Apple, $3 a share. You guys know I love dividends, but we're not talking about that today. We're talking about buying and selling option contracts. So first things first, you have to make sure that your account with TD Ameritrade or whatever broker you're using has options enabled. I know Robinhood has a whole process as well. You have to click that you want to get into options before you can do them. And you remember a prior video, we talked about options being the ability of a contract to buy or sell 100 shares of an underlying asset when it comes to stocks. There's also other types of option contracts, but for this video, we're talking about stocks specifically and utilizing the contracts to buy or sell 100 shares. So you jump back in. We're going to click on the trade tab here at the top. Make sure you click on trade. And when you have options enabled on your account, you're going to see the option chain here. It usually pops up. Now, there's different types of options, and depending on the security, not every security has weekly options. This is very unique to high volume underlying assets. So for instance, Apple is a very high volume traded stock. Today, it looks like there was 30 million shares traded. So what we can do is April 24th is the expiration date of the contract, to keep that in mind. And all you're going to do is do the drop down. You can drop down and show 14. Which is just a range. If we want to see all contracts that are on the market right now, of course, you're going to click all and you're going to see everything listed here. But that's not necessary for a lot of you. So you're going to look in here and you're going to go, okay, well, I think by the end of this week, April 24th, 2020, that Apple is going to be above $275 a share. So all we're going to have to do to buy the option is right click, hit buy, and click on single. And what this is bringing up, this is a naked call is what it is referred to. A naked call means that there is potentially, if you look here, unlimited profit, right? So that is what it means to be naked. On the other side of things, if you go over here, right click, buy a single put. Remember, puts are on the right and calls are on the left. Calls mean you think that it's going to go up. Puts mean you think it's going to go down in the value of a share of stock. So when you have a naked put, your max profit is, of course, the amount of money from $2.7250 all the way down to zero. That's your potential profit, but also remember that it is very highly unlikely that we're going to see Apple drop from $2.7250 down to $0 a share. Just keep that in mind. Not to say that you wouldn't be able to go out here. You see the option dates go all the way out to the 17th of June of 2022 right now. So people can, in fact, go in here, say 2 years in advance, depending on the underlying security, and say you think that it's going to be $115 a share by the end of the day on June 17th, 2022. So what I would do is I would come in here, I would buy a single put, and that would bring, let's just say single put, one put, confirm and send. You'll see the dialog pop up, your max profit, your max loss. You could just lose everything. Now, and that's one thing that you should really think about with options. Option strategies aren't meant to be a long-term investment. They are meant to be in and out, right? The people that get into them and get out of them know when you're trying to catch a pop. You're trying to catch a pop in the price and really catch the additional value of the premiums that people are willing to pay for the contract, not the actual share price itself, unless you actually want to buy 100 shares of the underlying asset. I know this sounds a little confusing, but that's the simple way of all we really wanted to cover in this video is that you come in, you can determine how many strike prices you want to see. And as you see, they'll list it right down here in the middle. This is the share price that you think it's going to hit by the end of this date. you're going to right click, you're going to buy single, put in however many you want. Say you want 100 contracts. I highly advise you to not do that if you're just starting. Start small, start with one, and buy a put, buy a call. See, you got to figure it out, because there's also a Greek element called theta, which is a time decay strategy, which we covered in a prior video, that goes into the closer the contracts get to expiration, they lose their value quicker and quicker. And that's literally just the money going into the pocket of the person who sold you the contract. Remember, this is a contract between you and another person, or an institution, or a bank, or whoever it is. So you're saying that I believe by the end of the week, this is going to drop below $272.50 per share. So I'm going to buy a contract for that. And I'm going to set my limit price because I know what I want to pay. I want to pay $143. Now, remember, with TD Ameritrade and some other brokerages, they still charge commissions per a contract. Okay, so keep that in mind. I think TD Ameritrade has theirs at 65 cents per a contract. And remember, you're going to pay that for each contract you buy. So if I'm buying 10 contracts here, then obviously you see my commission would be $6.50. Remember, you pay that commission when you open the contract as well as when you close the contract. So for 360 full round circle of dealing with an option contract, you will be paying $13. So remember to calculate that into what you think your profit might be, because you definitely don't want to have that eat into your full return. But yeah, that's simply how you do it. You just come into the trade tab with the underlying asset linked here, and you right click, you buy single if you want to do it on the puts, or if you want to do it on the calls, you go to the left side and buy single. Of course, double check everything that you want. If you want one share, if you want to do a limit order, which I highly suggest, set the price that you want to pay for it, confirm, send, and send it through. And that's how you do it. So what do we want to do if we want to sell a contract, right? So if I want to sell a contract to somebody else, because I want to gain the premium that they are paying for the contract, then how do I do that? Well, it's just the opposite. You're going to right click on the underlying strike price. You're going to sell single, and this is going to bring up your single contract that you can sell, take it down to one. Of course, you want to sell it at $1.43 here, which is actually $143. Remember that. $1.43 is actually $143, not $1.43. So for each penny you are paying, it is actually $1. Keep that in mind. So I would be collecting $143, and if this contract expired worthless, then I would get to keep that money, and the other person that bought the contract from me would be out of the money. And that's just a risk reward factor that you've got to calculate based off of what you know about the companies, what you believe about the companies, and what's going on in the macro environment. As well as same side on the left, calls, right click, sell, single. If you don't think it's going to go up, you think it's going down, you can definitely sell a single. But remember, when you sell a contract, that is you saying that you have 100 shares of that contract already. If this reaches expiration and you get assigned on your contract, that means you pretty much have, and you don't have 100 shares of stock, you have to go buy the 100 shares of stock that then you can sell to the other person for the price that you agreed. So it's a little bit complicated, but this video just shows you how to buy and sell option contracts within the ThinkorSwim platform. Again, every platform is different. You got to find the one that works best for you. And I hope you learned something. I hope you'll take some time to dive into them. It's definitely another way to just be able to diversify your portfolio, become a better trader, and really find ways to try to get your alpha edge above the market. So that's all I got for you for this time. I'm Daniel Snyder. This is The Market Investor. I hope you subscribe. I hope you leave any questions you have in the comments below, and I'll see you in the next one.